Day trading crude oil, Small Exchange just added a new crude oil product for the everyday trader. Jermal, you started out with your everyday trader, experience in futures last week. You traded your first futures contract. We're going to look at adding crude oil to the repertoire today with the new product from the Small Exchange. You talked about this with Pete a little bit. Maybe you can give me and the viewers a little synopsis here on why people might look to add crude oil, because you've been around trading for a while. You got a lot of experience, and it always is this funny thing that, like, once you get comfortable in stocks and you get comfortable maybe in bonds and a couple other asset classes, the first touch point in commodities is usually crude oil, and that surprises a lot of people. So what did you and Pete talk about here in terms of crude oil's use and why it is so popular, why people have so many opinions on this commodity that seems kind of random?
Well, as you know, I think it's pretty evident how ubiquitous oil is in our society. We, of course, most of the time use it from the standpoint of gas, and I think that's, although we crack oil down through refineries to get to gas, most people just usually kind of equate it like that. Just because when oil prices are high, we usually see that, offset at the gas pump, right? But initially, Pete and I were talking about this idea of my first interaction with as far as trading, and oftentimes, especially the group that I was trading in when I was trading at a prop trading firm, we usually looked for markets that were moving around a lot, and so most of the time, it's not like we were always had an oil position on. To be honest. It was only at times when oil was moving and when it was at certain, intrinsic levels, if you will. I mean, it seems like once it gets above 60 or 65, it really usually starts to draw some serious interest. We get to 70, it's going to really draw interest. And so that's usually kind of how it ended up working out. Oftentimes we were playing it, sometimes maybe through CL options, but a lot of times it was usually like USO, right? Or options in Exxon or Conoco or, COP, things like that. So that's usually been most of my interaction with trading oil. But, on the day that we were announced that this product, USO, that we're going to get to is coming, not sorry, USO, but SMO that we're going to get to, that was more interesting because of the idea, like you said, I did just start trading futures. I have a SFX trade on. And so this idea of a smaller price point, especially when you're talking about the kind of margin that we use here, it's a lot more interesting. So getting back to the original question, what's interesting about oil? Well, once it gets above this certain level, you start looking at different ways to trade it. You start having an opinion on it. How do I want to either get long or get short? And so that's kind of where it comes from.
I'm glad that you went that route, because that's actually where we're going to conclude today is like, why is it interesting to me as trader Frank? Because it moves, and like there's opportunity in volatility, as any active trader knows. A lot of people these days, especially these last couple of days, everybody feels the need to like stake a hard-lined opinion on something and be like, this is my trade and I'm gonna hold it or hodl or whatever the kids say until I'm right or I'm really wrong. And we know as more active traders, like, I don't care about what your opinion, like, I really don't care if you love or hate Dogecoin or Bitcoin or anything else. Like, sincerely, good for you. I love that you have an opinion and getting active. What I do push back on is like, oh, I'm going to make an opinion right now about crude oil and I'm going to wear it for years.
Right.
But I do want to start the discussion with just like you said, crude oil byproducts include gasoline, include jet fuel, include so many different things that affect the way that we transport ourselves, transport goods to and from us. And so it does become this ubiquitous term for, honestly, energy at large until renewable resources continue to eat more of this pie. We'll see what happens. Honestly, that is, to me, kind of the long-term trade for this is like, where do you think demand for energy is going to be in the long term? Because this piece of the pie for petroleum is shrinking in recent years. Will it continue to shrink, or will we actually swing back the opposite way? Will we find that we still need to depend on non-renewable resources like petroleum, crude oil? All of that said, that is like a long-term opinion thing that honestly you can play out in SMO. It's direct access to crude oil, as opposed to, like, I always joke, like ExxonMobil has a CEO and an operations department and a bunch of real estate throughout the country, and all of these different pieces that are going to affect earnings and affect the stock price. Crude oil is crude oil. So like when you go to Exxon to put your idea to work on energy, you're kind of misguided. So I do think that there is a place for using small U.S. crude oil, this smaller futures market, for playing your opinion out in crude oil energy in the long term. But I do like what you're saying of just like when oil heats up and we start to see some movement here, I'm just jumping in there because it's an active market with a lot of participants.
Yeah, I mean, you know, what you said is so true. I mean, the idea of trading those companies, I mean, there's so many other factors to it. And there's, you know, dividend and things like that when you're playing the options that, of course, you know, affects the options as well. So there's all these other different factors versus like having a pure play. I mean, that's really kind of the way to go. It's a lot more interesting that way. And yeah, it always seems to happen. I would say, you know, of course, you know, crude is a commodity. And so there's always a little more volatility with these commodities.
Sure.
And there's always certain price points, I feel, that once it starts to hit certain levels, I mean, it seems to happen the other day. Some news comes out of nowhere and we get a quick drop. I don't even remember what the news was the other day.
Who cares what the news was?
Who cares? Exactly. Like because there's always something. It's usually something that has to do with some type of OPEC or Russian type of deal more recently. Who knows? But it's that volatility that makes it interesting to trade, right? And so you do have to be flexible with your opinion, particularly with commodities, especially with something like oil, because it can change on a dime. It's hard to have like this long-term opinion. So I think, you know, this makes it a lot easier to be able to trade those quick opinions. And I feel like I've been seeing different tasty traders trade in and out of this more recently. And, you know, that's been kind of cool to watch too.
That's exactly right. And you brought up this idea, which has been a great idea for 2021, which is crude oil gets up to $65 a barrel and it just can't break above there. And so what you're doing there is some great work in this general idea of like not having an opinion on the market. Like, to me, having an opinion and reading news, like, I don't not care about news and being informed, but when it comes to trading, when it comes to scalping and trading futures intraday, if you're trying to trade based off of news, you're going to be behind everything. Like, for you to have to read and digest stuff and then make a trade for an intraday, for a day trading purpose, you're never going to get anything done. Opinions and all that stuff is worth developing for like where you want to put your charitable donations, like what you want to work towards as a human being, not what you want your portfolio to work towards in the next couple of hours. And so I love the idea of like, it gets up to 65, it can't break above it. I get short there, not because I think crude oil is going to zero, but just because that's an interesting point to start trading crude oil. I want to bring it even more into a smaller scope here, which is the day trading scope, which is just like exactly what you said, but just in either direction. Like, for me, trading crude oil and day trading it is a matter of like the market moves about $1 and a half on a given day here in crude. And once it gets outside of $1 or so, I'm looking at trading it. And that's when I start to employ my strategies of, if I am a trend follower in crude oil, like we saw just yesterday, crude oil picks up some steam to the downside, that I'm selling into that. And you see that you have plenty of bounces to sell into from the trend follower perspective. Once it got from, it started the day around $65 a barrel, gets down below 64 very quickly. Plenty of opportunities throughout the day to get short. Now, if you're a contrarian, more similar to my personality here, plenty of places here to catch those sell-offs and try to trade the bounce from the long side. This is a prime market here because it is a commodity. It is more volatile to take that opinion and shelf it and just say, I'm going to let the market come to me, let the market show me what the trade is. And I think that this SMO is a perfect ad for that, because until now, you've had to do it with clunky ETFs or a future that's been too big.
Yeah, and I know a lot of times we end up putting out, at least I see it via the Twitter page, for the small exchange, we end up putting out the moves across the week, right? Like across a 5 day period. Where do we calculate those? I think, where do those come from? And I'm guessing like yesterday was definitely outside of the move of that particular day, right? Like, so where do those calculations come from? I mean, so that people can have an idea. I want
I'm
to know.
glad that you bring
I'm a
that
new
up.
futures trader. I want to know that.
Yeah, no, absolutely. I'm glad
I
that
mean,
you
I'm
bring
guessing
that
it's
up.
based on daily volatility moves, right?
That's exactly right. So, like, at the heart of, I always tell people this, like, at the heart of realized volatility or like any other number that's like a statistical value that's supposed to let you know how much something moves is the standard deviation. And so what we do for our small exchange subscribers, and here's a quick plug, if you haven't already, we just revamped our whole newsletter for our subscribers, for the members of our community. Go to subscribers.thesmallexchange.com to check that offer out. They also get reduced fees and everything else on the small. Is really nice offering there. But yeah, what we do essentially is go back for the last couple of months here and look at from close to close, how much is crude oil moving, and then summarize it with a number, which is the standard deviation, which essentially says with 68% confidence, this market will stay within a buck and a half on either side. And so when it breaks outside of a buck and a half, there's a decent amount of edge there, right? Like you're basically trading the fact that like, will this come back into line and close like a normal day, or will this be one of those 32% of the time abnormal days? In the same way that you look at strangles on a market in a longer term fashion, day trading in the crude oil market a lot of times is like, okay, it just moved from being net change zero on the day to down a buck or down a buck and a half. I'm going to buy it because I think it's going to close like a normal day, or I'm going to sell it because I think it's going to, close outside of this range. It depends on what your mentality is there. But yeah, that's the statistics behind it, is just the simple standard deviation. But that factors into your realized volatilities and everything else you see online. It's basically the same number.
No, what you said was really good. Like the idea of when it does fall out that you look to buy it, or maybe you look to sell it based on how you think. Because like you said, I think it's important to understand just because it moves outside of that range doesn't mean it's a chance to buy it with both hands. I mean, it's just the idea of what's going on at the point in time. That was really interesting what we just saw in the background there. But I couldn't help but not point it out. That was really awesome. He's riding a scooter inside. When it moves outside of those ranges, it's important to understand, like it could go further. And I'm pretty sure it did yesterday, but
totally.
Again, you always trying to look for that chance for mean reversion, whatever that mean reversion to that level may be. But I think those I like seeing those the moves over the 5 day period, because those are some interesting guidelines. I mean, it's a good idea. Even if you've just stepped into the product, now you have a chance to see, okay, what has it done over this time period, and what can I look at, and what can I kind of expect to a degree.